Good morning. This is George Tkaczuk of RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. Okay, the things I want to talk about this morning is the state of the market and the type of things that you can do in this market. Okay, currently we have some mixed signals. In reality, it looks like the market is slipping into correction. Over the last 2 weeks, leading stocks have been hit over the head with a big baseball bat. I mean, they've been sliding down. And then we had last Friday's action, which we'll get back to right away. So if we look at the NASDAQ and the S&P 500, we have 6 distribution days, which the distribution days are days of heavy selling coming into today. And that's on the S&P and the NASDAQ. Now, the interesting thing about this is Friday we got a disappointing jobs number. The market's gapped down, sold off hard. However, it closed near its highs. So that's a little bit of a conflicting signal, meaning telling us, has the market found its bottom? Maybe we won't go into correction and the market's just going to look past these numbers. Now, also what we have is some interesting divergences. A few weeks ago we talked about when the S&P and the NASDAQ was hitting new highs that we had this confirmation. It was confirmed by the Dow Transports, it was confirmed by the ETFs like the XLF, the financial ETF, it was confirmed by the home builders, the XHB, it was confirmed by the consumer discretionary ETF, the XLY. However, what we saw over the last 2 weeks is a lot of divergence. As the market, the Dow still near its highs in the S&P, the financials were sliding down, the home builders were sliding down, transports were sliding down. So we get the divergence like this. It's not a good thing. It's telling us this market may very well correct. However, again, we get back to last Friday, all these sectors got hit hard. However, they bounced and they closed at their highs. So when you get a situation like this, naturally, caution is advised. So what do you want to do? Well, you want to build watch lists. And the type of watch list you want to build is you want to take a look at which stocks are still acting strong, which sectors are acting strong, and you want to look at these. So we talked about the biotech sector in past sessions because that's still one sector that's acting very strong, and that's stocks like Celgene, Amgen, Biogen, Gilead Sciences, Regeneron. All those are still doing very well. The home builders, on the other hand, have been starting to break down. Of course, Ryland Homes is still hanging in there pretty good, recovered its 50-day line on Friday. So that's something to still keep on your watch list. Other watch lists you want to build in stocks that are fundamentally extremely strong, but maybe just aren't at their top. So you want to take a look at that. Now what I'm seeing here is some sector rotation. We see the the apparel manufacturing sector starting to do pretty good. We have Fifth and Pacific Company, which is the parent company for Liz Claiborne, pretty much at a new high. We have Hanes Brands, also at a new high. In that sector, you have Michael Kors, symbol KORS, that I think presents itself with a pretty good bottom fishing opportunity. Now, I'm not much of a bottom fisher, and I really don't like to propose that anyone really do that, but when you get a compelling story like Michael Kors, it's something worth looking at. And why do I say this? Michael Kors basically for the last 7 quarters has had triple-digit earnings growth, last quarter coming in 129%. Sales over the last 3 quarters have been over 70%. Has a return of equity 57%, so its growth rate is right about 58 to 60%, and this is not expected to slow down anytime soon. Earnings for next year going forward are going to be up about 118%. For 2013, and for 2014 up about another 32%, and those might be very well be conservative, and earnings have constantly been revised upwards. So this is the kind of stock you do want to look at. Also, mutual funds have been accumulating this stock for the last 5 quarters. It's basically doubled from about 227 funds owning Michael Kors now up to about 566, and the funds were buying most these shares above the $50 range. So that tells you there's going to be a lot of support. Now, if you look at a chart of Michael Kors, it's found support at the 40-week line pretty consistently over the last year. It's about the $52 area was near-term support right now. It's trading right about 55. So if you want to try a play, you can try it in this area between 52 and 55 if it pulls back. And if, of course, it doesn't work, just get out of it because if it doesn't work, it probably means the whole market is spilling over. Now, so if this stock is so good, why has it not performed so well? Well, the holders of Michael Kors have done a funny thing. After every great earnings report, 2 days later, they issued about another 25 million shares, although this is non-dilutive, but insiders were selling it. Once they got good news in their sales, they issued another 25 million. Last earnings report 2 months ago, another blowout earnings quarter. 2 days later, they sell another 25 million shares. So the stock trades down. That, I think, is pretty much what spooks the stock, and also that whole sector, the apparel manufacturing sector, has not been doing well. But now this sector looks like it wants to turn around, so Michael Kors may be a very compelling buy right here at these levels. As always, let price and volume be your guide. And for full disclosure, I do own Michael Kors. And this is George Tkaczuk with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago, and have a good trading day. Thank you.